Welcome back. You're watching Big Deal. Now, JSW Ventures has announced 2 deals this week. Investment in Growcoms, which is into spices, and stake sale in Purplle, a beauty omni-channel player. Sachin Tagra, who's the managing partner at JSW Ventures, joins us now on Big Deal. Sachin, always a pleasure to welcome you on CNBC TV18. Let's first talk about the latest deal that you have done, funding for Growcoms. What is the rationale of this deal, and can you also tell us what was the portion of fund raised from JSW Ventures?
Thank you, Nisha, for having me on your show. It's always a pleasure to talk to you. Yes, we announced the deal today in a company called Growcoms. It's a B2B managed marketplace for spices vertical, enabling supply-side integrations. And they have a huge focus on traceability using blockchain. We like this business because it's a very large market. It's a $17 billion market with about 30% of exports from India. We think with the traceability solution and the value add which this team can bring in, there is a good opportunity to scale up. They will also be utilizing the idle manufacturing capabilities in the spices sector for better control over product development and quality. So, this team who's driving this business, the co-founders also come from a spices background. They have a huge domain expertise. They have done the similar work, not with so much of technology intervention in the previous assignments. So we think we have the right team to lead this business and scale it up. So to your second question of how much we invested, so this round was $3.5 million. We did a $1.5 million out of $3.5 million in this business.
Right. So that's the latest. But the one which is actually making headlines about JSW Ventures is the 18x returns from your Purplle exit. Now, tell us the rationale for exiting at this particular time, and also at a time when e-commerce is not really commanding higher valuations, is not the flavor of the season. How come you've got this kind of a valuation, and the rationale of the deal, and also with Ranjan Pai buying out shares from you?
Sure, Nisha. So we are investors from Fund 1 and Fund 2. Fund 1 we started in 2016, and this was one of our initial investment. Now this fund is coming to the end of its life. As a close-ended fund, we are supposed to give exits or liquidity to our investors. For a fund manager like us, it is always a difficult call to sell the assets which are compounding, growing, doing extremely well. But we took a call of moving ahead with this secondary transaction of selling the stake to Manipal family office, because we need to give the capital back to our investors. And we are happy to share that with this exit, we have given 2.7x of the Fund 1 back to our investors. In our language, it is called DPI. And the Purplle deal has given us about 57% IRR. So it was more a regulatory or the need of a fund manager to give the capital back, but we still continue to believe in the business. And we are investor from Fund 2 also in Purplle, which we continue to hold because we think that it is still, the opportunity is still very large. We are still in an early stage of our scale-up journey.
Right. No, Sachin, very congratulations on that, because at a time like this, to make an exit with a hefty return, so that's really speaks volumes about JSW Ventures. But I want to ask you that while there is so much slowdown, you have gone ahead and transacted twice right now. Are you seeing a pickup, and is it broad-based? What is the sense looking like right now?
No, I think, Nisha, there has been some bit of a slowdown over the last 1.5 years for sure in the investing in new companies. What we saw in 2021 and early 22 were very different eras. I don't think so we'll see that kind of a euphoria ever. But the business continues as we see investors, we have raised capital, we have a dry powder with us. We need to deploy that in a defined period of time. So I think all investors keep looking for the opportunities. It is that, the time required to close such calls have increased from 2-3 meetings earlier to now 6 to 8 meetings, with the startups going more deep into their unit economics or the profitability potential of the business, going more deep into the technology they're going to use or how they're going to build technology. So there are, more things we are evaluating as investors, but this is a business as usual for us. We have never stopped investing. and neither we intend to do it. We'll keep looking at the opportunities. It's sometimes opportunities take time to fit in your thesis, but once you see an opportunity, you would like to move fast. Fortunately, both the deals we have been working on is from last 3-4 months and getting closed in the same week. But that was never the idea of doing 2 deals in a week. It just happened to be in the same week.
No, right. And also I wanted to ask you, you said when we get the right opportunity. So in a changed environment, in this particular environment, how has your strategy changed and which themes are you really chasing right now?
When we started this business, we always thought to invest in capital efficient business. I think that thesis is playing out for us in our entire portfolio. So we continue to double down on the businesses which we see as capital efficient. This is more from the capital usage perspective. When it comes to the sectors, consumer remains our focus. Consumer tech and B2B remains our focus. In fact, significant amount of our returns have come from consumer businesses. So we strongly believe in doubling down on consumer. We are seeing some agri-tech is the first investment we have made from the fund. As of now, we didn't have an exposure to agri-tech. This is our first deal. Now we continue to look for opportunities in the SaaS and also in the clean tech space. That is a new theme which is emerging. We have looked at few businesses. There are a lot of interesting ideas coming in there. But in this sector, because the number of startups are limited and the amount of capital waiting to getting deployed in clean tech is very high, the valuations are still high. So we've not been able to deploy in clean tech. But to me, that's another emerging theme. Deep tech, we have been talking about it, but deep tech has a long gestation period and very difficult to predict the revenue in the early stages of the business.
Right.
So we are looking at few opportunities, but again, are difficult to make call on such businesses. Right. Consumer and SaaS remains our favorite. And now with Growcoms, we have added B2B as well as agri because they are B2B marketplace.
Right,
in that sense.
Right. No, you rightly mentioned, of course, SaaS and deep tech, some of these have scarcity premium still going because the funds are still finding that attractive. In fact, that's coming in both from you as well as from Bloom Ventures. Thank you so much, Sachin. Always a pleasure speaking to you. And thanks for all your takeaways on the ground, on the perception as well as the perspective on the startup space. Thank you so much, Sachin Tagra, for joining us. With that, it's a wrap on this edition of Big Deal. Thanks so much for watching.